Each philosophy of investing works, like momentum investing works, value investing works, buying options works, selling options works, futures trading works, short-term investing works. Each philosophy works, but at a different time period. No philosophy works on each time period. So if you are following, say, growth investing, doesn't mean every year you will make money. There will be periods where growth investing will give you negative returns. There are periods where momentum investing will give you negative returns. There are periods where options trading will give you negative returns, right? So no, every philosophy works. However, at the same time, each philosophy does not work all the time. So there are times when the philosophy will work, do very well. There are times when that philosophy will do very poorly. The second part we have to realize is what are the base rates of success. What do I mean by that? So if you take 100 traders, right, options traders, and if you analyze their last 3-year, 5-year, 7-year profits, SEBI has actually done this multiple times and has come out with public reports with very detailed analysis of lakhs of investors who have done options trading. What they have found is that only 7% of the futures and options traders actually end up making money more than the FD interest, which means there is a 93% failure rate of making money, not of individual trades. On aggregate, they have made less money than FD. So they were much better off not spending a single minute, just do a 3-year FD or a 5-year FD and you will beat your performance that you have spent hours every day into trying to trade, right? Similarly, if you look at momentum investing works wonders over long periods. There are lots of studies which have shown that momentum investing works extremely well. But the flip side is that in the years that it doesn't work, the drawdown or the loss is huge, humongous. So it's difficult to stick to that philosophy when the losses are huge. Sometimes, like in 2009, momentum investing strategies actually ended up losing 80 to 90% of their previous peak, right? So what is that? If you actually observe around, if you look, so this is a field where the older you get, the wiser you get and the richer you get, right? So if you look around, which are those old, wise, rich men or women, right? So, or those investors. So those rich old investors, most of their money has actually been made by long-term fundamental investing, which means the base rate of success for long-term fundamental investing is the best. So that is what I follow. There is one more reason why this suits my personality. This suits my way of investing. I like to read books, I like to read annual reports, I like to think, and I like to act only sometimes. I don't want constant action, which means this long-term fundamental investing works very well for me. That's why I follow it. Now, let me elaborate on how this actually works, right? So, GDP, interest rates, war, tariff wars, politics, who is the prime minister, what is the economic policy of the government, of the country, all these things, of course, have an impact on the stock prices, right? But they have a short-term impact on the stock prices. There is a saying which says that stock markets are a voting machine in the short run and a weighing machine in the long run. What it means is that over a 5, 7, 10-year period, if the profits of the company go up, stock price will go up. If the profits of the company don't go up, stock price will not go up, right? Classic example, and there are several examples like this, I'll give. In 2006, Pidilite, which is Fevicol, was one of the best adhesives company in India. There was consensus that it is one of the best way back in 2006 itself. Even today, it's considered one of the best, the best adhesives company in India, right? Even though there is more competition today. In these 20 years, the profits of the company has gone up 25 times and the stock price has actually gone up 60 times, right? So this is how successful investing works. You identify the correct company, make your thesis, buy at low valuations, keep checking whether the company is on track, hold till the company is on track, don't be in a hurry to sell, let the management and the employees do the hard work, you do the hard work of being patient and not being fickle with your investments.